live.
Yeah, welcome everybody. Today we want to talk about crypto assets again from an institutional perspective. I think it makes sense that we frequently talk about these issues because things are changing. As we know, we have had the Terra Luna crash affecting investor sentiment. We have inflation skyrocketing, also affecting, of course, investor sentiment. Then we have the announcement that at some point of time, the ECB might adjust their interest rates. This might again change the sentiment. And all of these topics we would like to discuss today. We would also like to go into detail with regard to specific asset classes, for example, DeFi and other tokens, because crypto assets is, of course, more than Bitcoin. Yeah, that's basically the broad topic we would like to discuss about. And with this, I would like to jump directly with everybody here in the panel into the discussion. And I would like to ask everybody to briefly present himself and also please the background of the company and what you're doing. Who wants to get started? Benjamin, would you like to get started?
Yes, sure. Thank you for having us. So my name is Benjamin Schaub. I'm a consultant at Tech, which is a blockchain consulting firm that is completely focused on digital assets. So this means on the one hand side, we are dealing with all the topics that are important for integrating crypto assets into existing infrastructures of financial institutions. And on the other hand side, we deal with all the topics that belong to the word or expression digital assets. So this means security token, utility token, NFTs, but of course also with the general application of blockchain. So in Germany, for example, this could mean that we are dealing with the tokenization of fund units and how this influences all the relevant players in the industry.
And you are also an expert with regard to the CO2 emissions concerning Bitcoin, right? We will talk about this maybe later on. Okay, who wants to go next? Maybe Christian, would you like to present yourself?
Yes, thanks a lot. So I'm Christian Labetsch, Managing Director at BlockSize. And we understand ourselves as a bridge for the financial industry and equip financial institutions, but also since last year, DeFi protocols with information, trading and settlement services for cryptocurrencies.
Excellent, perfect. Who wants to go next? Sebastian, would you like to briefly present yourself?
Sure, I can. Hi, everybody. My name is Sebastian Kraft. I'm Director and Principal Product Owner of Commerzbank's TLT activities. We're dealing with the whole topic around blockchain and the use in enterprise applications since 2016 already, but of course also investigate in digital assets, crypto assets, and so on and so forth. So we already did a couple of things there, like investments in 360X or investments via Commerz Ventures into Curve or Elwood and so on and so forth. We also on the client side do have already a, let me say, crypto near offer via Comdirect, where we offer our clients to invest in cryptocurrencies via certificates, so-called ETPs. We are also planning to build a institutional client custody solution for the future. So we are quite heavily investigating all this stuff. Yes, I'm very happy to be here. Thanks for having me. And yes, I hope I can give a couple of insights into how my perspective is how traditional finance and decentralized finance fit somehow together.
Thanks, Sebastian. Nice to have you here. And finally, Niels, also please present yourself and your company.
Hi, everybody. My name is Niels von Schüneich-Carolat. I'm Managing Director at Banco Scheich. Banco Scheich is a bank that exists almost for 40 years now, specialist in market making and liquidity provision. We are active in the field of cryptocurrencies since 2018, 2019. Today we are for institutionals the largest regulated OTC crypto trading service provider. We are also active in the field of digital assets and tokenization. So we just tokenized the first convertible bond under EWPG law. We tokenized UCITS fund, the normal fund. So we are very active in that field. We are also now working on passive products in the traditional world with an ISIN. And yeah, happy to be here and give some insights.
Excellent. I think that's a good round, especially for Germany, because in Germany we see that quite a lot of this stuff picks up with companies. Typically, you know, that's at least my perspective. We see that smaller banks, smaller organizations, startups and so on are acting first. Then larger organizations might come later. They need a little bit more time to sort everything out. But that's not necessarily bad, right? It's just basically the nature of various companies and their corresponding size. But it's therefore interesting to see what's happening here in Germany, also in comparison to other countries. To get started, we said that we would like to first discuss crypto investments in general. That's of course Bitcoin, Ethereum, DeFi, and so on and so forth, when you compare it to traditional investments, right? So, and therefore I would like to ask everybody here in the round the following question. Do you see an uprise in crypto investments already within the circles of your customers, for example? Or is this pure interest? Because my experience now since 5 years at the university is that people are very excited and they have a lot of interest, but very often and nearly always it stays with interest and it stays with excitement. And very often decisions to really invest in crypto assets is basically not done yet, at least to my knowledge, right? It might happen that much more is happening in the background, hopefully. But I would also like to discuss with you what's the public opinion here, what might happen in the background, and how is the interest, but how is also the real investment decisions happening with your client base and the context in Germany. Sebastian, what's your insight here? Well, and by the way, maybe one remark here: we will not give investment advices in any way. You know, we just report our impressions, our personal opinions. That also might not necessarily be the corporate opinions, and so on and so forth. You know this. And with this disclaimer having been said, Sebastian, please, what's your opinion and impression?
Yeah, thanks for adding that, Philip. And also what we were just saying is, from my perspective, completely right. I think what you need to consider also is the timing perspective of different asset classes which you have. Yeah, so there is a variety of different crypto investments that are available for investors, of course, and we normally distinguish in 3 different classes. And although maybe just let me give a perspective on these different 3 classes. Although I know that digitalized securities is not the focus of today, nevertheless, this is the first class we normally look at and discuss with our clients. And this is mainly a discussion with institutional clients, so institutional investors and issuers, of course. They are interested in this type of securities, given the fact that you can, of course, kick out intermediaries there, save cost, automate things, so on and so forth. So that's the rationale behind it. But nevertheless, there is a starting interest, and it's, from my perspective, very, very early stage, and the infrastructure needs to be developed or to be used. So what we see here are solitary projects by some banks with their clients. So this is something which, from my perspective, is something which will need a couple of years still until this will gain ground. Then the second one is the classical, let me say, crypto assets like Bitcoin, Ether, and so on and so forth. There you have the asset, it is there, it is available. You have the infrastructure that is there. You have a new type of asset class, which could be a substitute for traditional investments in general. You have the regulation making progress. You have incumbents more and more making efforts to provide services here. And of course, what you were just saying is that there is a, let me say, certain interest of clients to invest into these classes. So infrastructure, regulation, incumbents entering the space, and the interest leads me to the end that yes, there will be a growth of this asset class, I'm quite sure, but it is still slowly. And I don't think that there's going to be a huge shift from traditional to DeFi from one day to another. And I think what is very crucial is that we educate regulators, but also the potential investors. Also what we saw from a small market research which we conducted a couple of months ago. And last but not least, it's tokenized assets. Tokenized assets, I think that we are in a period of exuberant expectations at the moment. This will consolidate. And there are also some legal questions open, like the Sachenrecht discussion in the German Civil Code. But this, I think, is something which will also take another maybe 2 years, but then slowly also gaining ground. So from a timing perspective, I think the crypto assets are the ones which will grow now successively within the next years. Then afterwards, I think that the whole NFTs and digitalized assets will come, and then last but not least, the digitalized assets. So I think the timing is very, very, very important to consider here.
Yeah, very interesting, Sebastian. Thanks for this summary, and I would largely agree. Just one additional question for you, Sebastian, because we know each other now for at least 4 years, right? Would you have expected this 3-4 years ago when we talked about security tokens?
Yeah, it's honestly, it's always slower than we all expected and hoped. And yes, unfortunately, I have to say, with regards to all this digitalized securities now with the new regulation, it's getting hopefully faster, but it takes definitely longer than we all expected and hoped. Yeah, that's the case, unfortunately.
Which is, that's how it is. We can't change it. But what I find interesting is the following: that nobody would have expected 4 years ago that we are mapping debt instruments, Schuldverschreibungen in Germany, and so on and so forth. That we are mapping these capital market instruments on a crazy cryptocurrency called Ethereum. This is something which would have not been thought of 4 years ago, right? That's very interesting, and the mind of any persons in the financial sector has really changed here. People have gotten much more open, right? That's interesting to note. Benjamin, what's your opinion here? How large is the interest in crypto assets on behalf of, let's call it, traditional organizations in the ecosystem, in the financial sector? Is it just interest, or do you also already see that people are acting?
No, I think there's definitely more than interest, but as you both already mentioned, it really takes time, and it's hard to acknowledge, but it takes a lot of time. And this, I think, is the interesting part, looking in the future, that we see the financial institutions that we have today who are really analyzing, okay, what impact will crypto assets have if I want to offer them to my clients? And then on the other hand, you see the fintechs or the crypto companies who raise funds, who invest aggressively, who build products in a very, very rapid speed. And on the other hand, you see not reluctance, but you see those players really, they take their time. But we have to say also, it's not for all players always that easy to really engage in crypto. So for example, last year, we had the Fund Jurisdiction Act, which allows asset managers to invest in certain special alternative investment funds up to 20% into crypto assets. And of course, they are looking into it, and they have to analyze how this will impact their systems, their processes, and so on. But they are dependent also then on a custodian, of course, a crypto custodian. This is just a regulatory setup. And without a custodian who is able to serve them for such a product, they will not be able to offer it. So I think this really leads to a situation where it takes even longer, because it's not on one player to really make an offer. It's really, they have to interact with another, and then, for example, there are still topics like, okay, what are the German Kryptowerte? What are crypto assets for us? It might be, is it a new asset class? Is it maybe a commodity? Is it a currency? For financial institutions, it's really important how to deal with it. And as we all know, this is something where many people disagree, basically, because one says, okay, for me, Bitcoin is more like a currency. The next says, it's for me, I will treat it like a commodity, and so on. So still, we have some very important discussions here going on. This will take time, and I expect with regards to the special alternative investment funds that maybe in the middle of next year, end of next year, we might see some more significant inflows. Right now, if I'm not mistaken, there's only one fund who allocates this way. And then on the other hand side, I think when we talk about banks, then I think we did together with you guys from the Blockchain Center the Coinbase Crypto Report, where we analyzed the behavior or the response of retail investors. And there we can clearly say the demand is there, and it's not like it's peaked. It's definitely there, but all the players, and this can be crypto exchanges as well, need to still improve their product. So what we found very interesting is that for 25% of the respondents, still the investment relevant information is missing, for example. And the security of funds is a big issue for many retail investors. And there, I think it's then maybe up to the banks to really build some offers. But there again, they are then dependent on their counterparts for doing the custody, for example. And these projects, unfortunately, take time.
Yeah, makes sense. We now come to Christian and Niels, who have basically left PowerPoint mode because they are already doing business in the field, but there are not endless people in Germany who are doing it this way. Let's say it this way, right? And this is contrasted by ever increasing numbers of individuals who seek to invest in crypto assets. And I think that's interesting. 2 months ago, the White House in the US has published an executive order. And in this document, in the first paragraph, the White House, you know, it's not any random organization out there, it's the White House. The White House stated that 40 million US citizens are owning crypto assets like Bitcoin and so on. 40, that's 40 million people. That's 16% of the population in the US. You know, that's massive, because if you would ask how many companies are touching crypto assets like this, then it would be a much lesser number, only probably maybe some dozens, maybe 100, 200 companies touching this in comparison to 40 million individuals in the US. I think that really shows that there is traction on the individual level, but the corporate level needs more time for any adoption out there. I think that's just also adding to what Benjamin just said. Yeah, maybe Christian, what about you? You are doing business in this field, DeFi and other things. So what's your impression here? Would you support what has been said previously, or do you think it's differently?
I mean, being around in that space for already a few years, I think I got the reality check. Back in 2017, I thought, cool, now they got it. And having worked with big clients from the financial industry, international CSDs, even governments, I thought, wow, they got it. They're going to implement that maybe next year. And something that I've really learned is that change takes time. You need to be patient in order to see adoption. Where I kind of disagree is, I don't believe that the interest is higher at the current stage. I'd really say that the interest in Bitcoin spiked in 2017, was probably at the top. Ever since, people are still very interested in it. It didn't decline, but it also has not increased, at least not in my environment. But something drastically changed since then, which is that financial industry players, finally, some of the first movers, started to adopt infrastructure and develop successful business models around cryptocurrencies. And this, so to say, provided the proof of concept for other industry peers to follow that. So all of a sudden, it's not just interest, it's also a fear of missing out. It's peer pressure, because now decisions within financial institutions that certainly take time and that certainly require a change management process before that, right? They're not purely driven by education and by obtaining the right information in order to make an informed decision to enter that. Now they're also driven by the fact that other peers already entered the market, and that it's not about whether you can do it or not. It's more about how quick can we do it? Because if they actually manage to do it, nothing prevents us from doing that. And I think this is, so to say, changing something in the industry, and will lead to way shorter implementation time. So I'm expecting really the broad industry to move into that more or less in the next couple of years.
Yeah, interesting point, because even in Germany, the very traditional Volksbanken network is basically able to here and there adopt this technology. There is the Volksbank Bayern Mitte around Ingolstadt and the Volksbank Kurpfalz around Heidelberg, which are offering Bitcoin services to their clients. It's very, I was very surprised when I saw their website, because they are providing Bitcoin and Ethereum, also that's crypto assets consulting, right? And you have to pay, I think, €100 for such a consulting stuff. And then there is a guy from their banks advising me whether I should buy and how I should buy and how much and what and so on and so forth. You know, it's interesting because I was very surprised to see this because it's very traditional structures in this banking network. And at least they are trying to do their best to even provide advising in this field, right? That was very positive surprise. I made some screenshots in case this advising product is disappearing for whatever reason. I made some screenshots for the future because I was so positively surprised about these two smaller banks, right? Niels, what about you? What do you see in your context of, let's call it a B2B bank, right?
Yeah, so I think we have some insights there because we are like the infrastructure enabler or the enabler of banks, of corporates to really trade crypto or offer their retail clients to trade crypto. And I just want to bring up some points in addition. So you just said the retail is very, very active and the institutionals or corporates are not yet. I think there's a reason for it, because if you look at the offerings, most of the exchanges are completely focused on retail. And there's a huge lack of real good offerings for institutionals. For example, if you want to buy crypto as a regulated entity or as a fund, you can't just do like a pre-funding and send 5 million on a bank account of a British Virgin Islands and hope that one day later you see like at Binance or Kraken your new statement. So you need like services like post-trade settlement and other services that these institutionals are aware of from the traditional world. I think this is a huge challenge to provide a service that all the traditional players feel like in the traditional world and get the same services. This is what we are working on. So our main clients are banks, smart brokers, corporates, high net worth individuals, and as you know, also the state of Hessen. So what we see in cryptocurrencies is right now our leads pipeline is escalating. So almost all big banks, all brokers, all insurances, almost all asset managers, family offices, they are now searching for a solution to enable their clients to trade crypto. And they are all not just looking at it, they are now working on these projects. Even the most conservative players that you just mentioned are now working actively on that. And in my opinion, it's not just checking out what's going on. In 6 to 18 months, almost every smart broker, in my opinion, will offer direct crypto buy sell options for their clients. So plus, not only the banks and smart brokers are very active, also all huge corporates are very active because they are now in the situation that like if you are in the chemical branch or in the pharma branch and you are working like in countries like El Salvador, you are forced to accept crypto. And even if you don't want to hold it, even if you just want to flip it into euro without a risk, you need a service for that, and you need to think of how you will manage that. And this is a huge topic where we see a lot of projects now coming in. So this is the cryptocurrency area. I'm of the opinion of Sebastian that you have to divide these two worlds, cryptocurrencies and digital assets. You just mentioned digital assets did not improve the way that we thought it would improve in the last 4 years. In my opinion, there were 2 reasons in 2017 why it did not scale that much. First, it was a regulatory framework that was missing that gave institutionals a comfortable situation to invest in. I think now we have regulatory framework so it's not perfect yet, but compared to other countries, you know when you invest that there is a regulatory framework that you can rely on. What is now missing is a secondary market to push the demand side. And I think if we all just work in like closed shops, and just work with bulletin boards, this won't help. So we need a liquid secondary market and a regulatory solution for that. And then we will also see a massive scaling in digital assets.
Yeah, interesting. So basically, you have one common denominator that you all expect basically significant growth. I also from the institutional and from the corporate side, it's basically very interesting to hear. And apparently what you also signaled is that much more is happening in the background, right? Let's make a very quick deep dive into the Terra Luna disaster, which happened 2-3 weeks ago. Do you think that there is some very bad consequences here for our ecosystem, you know, like sentiment fading away, investors have lost too much money, many people saying, I told you so, you should have never touched these crypto assets, you know, all these stories. Do you feel that there are some very significantly bad consequences from this, or will we be over this on the short term? Maybe Niels, you might be might have gotten thousands of questions on this, right?
In my opinion, this did not help to bring trust into the market on the one hand. On the other hand, we see that we are in a very early stadium of trying different things out, and people need to understand that with crypto and blockchain, you get more rights. But you also have to think about what happens when you invest and see the consequences and really try to build up knowledge. And when you do that, you would have known that it could be eventually more risky to invest in a stable coin that has like an algorithm behind and not in one that is backed one-on-one with like euro or dollar. So it's a huge lack in trust, I think, but we will definitely see stablecoins in the future because they're essential for the ecosystem. Because with stablecoins, we don't have always jump between traditional world and blockchain world. Now, this comes up with high transaction costs. But I think the maximum upside of stablecoins, we will see the maximum upside of stable coins when we see like a digital euro or digital US dollar. So something from the official side, in my opinion.
Okay, interesting. Any more points from you, Sebastian? You within Commerzbank, you might have also gotten thousands of emails and questions about what's happening there, right?
I don't know. Luckily, these type of questions normally then get to our relationship managers, not to myself directly. But nevertheless, I can only say what Niels was just saying is correct with regards to this was not entirely helpful. Explicitly for us, who we are now planning to bring an offer to the market, and of course, everything that occurs that makes the distrust into the whole system again larger is not very helpful for us. So that's what I can say here. So yeah, but nevertheless, I think we need to distinguish a little bit also between the cryptocurrencies like Bitcoin, Ethereum, and the rationale of investors willing to invest there, which might be a broader investor base, and other investors who are deeper into DeFi and DeFi services, who are more looking into stablecoin constructions like Terra Luna, and so on and so forth. So I think also there we need to distinguish a little bit, although obviously all the value or most value of the cryptos is somehow still strongly correlated.
Okay, and if we now basically turn, well, both of you have said there might be some lacking sentiment or trust. You know, you talked about the word distrust in the ecosystem, but it could also happen the following, that basically trust in Bitcoin is basically increasing because yes, thousands of tokens have lost in value, some of them imploded and so on and so forth. but Bitcoin made it quite well, through this week. Would you disagree, Benjamin? Maybe what's your opinion there?
I think it's really, the whole discussion is about differentiating between the stable coins that are out there and treat them like a product. And what we've recognized now, that this type of stable coin, algorithmic one, didn't work out in this point. But there are others, and for example, we have USDC, where BNY Mellon is the custodian and so forth. So there are other products out there, and we really have to differentiate what's behind that. Because I think when we look at the news coverage, then of course it's easy to say, okay, I told you so, it's all a scam and so on. But the point really is that we have to say, okay, this is one type of product which failed. And I mean, on the other hand side, when the Wirecard stock imploded, we didn't say, okay, you cannot buy stocks anymore. It's all scams. So I think it's really important to differentiate, but this is always the problem, that it is for many people not that easy to differentiate, because for them it's then what happened to Terra Luna is basically what crypto is all about. And I think for the industry, maybe what's a little bit bad in the short term is that there are still managements making their decisions whether crypto is a viable asset class or not. And of course, that's not helping at all.
Yeah, absolutely right. And Christian, you are also doing quite some stuff in the DeFi domain, right? Did it somehow affect your business or your stakeholders?
No, it did not. But to quickly touch up on that topic, as Niels said, stable coins are vital. They are the fuel of the DeFi ecosystem. They are essentially included in every significant pair, right? And as you can see, I mean, the hit on UST, namely, also hit the DeFi ecosystem. The total value locked, I mean, decreased significantly, right? But I mean, regardless of the Luna crash, I think what has happened will help the industry moving forward, because we all learned a very vital lesson that when you look at stable coins, you always have to ask yourself, how is that stable coin actually backed? What is the collateral behind it? And when you look at the specific case of Luna, you saw one very interesting aspect, something that happened. You actually take a volatile asset, okay, use that as collateral to back a stable coin and say it's stable. I vividly remember that when the governance proposal went through to increase the loan to value from 40% to 80%, okay? I mean, in a bull market where the Luna price is always going up, right, that works very nicely. But now what has happened is all the people maxed out their loan to value, which means they borrowed against their Luna, a highly volatile asset, 80% in UST. Then all of a sudden, the UST took a hit. And what happened is that by that, of course, the underlying asset, the collateral was affected. And by simply dropping 20%, all of the loan to value ratios will be hit, and the collateral or the contract will execute your position. And that all of a sudden then ended up in the whole crash of the Luna ecosystem. And honestly, I mean, now this has happened to Luna, but I think it's a very good a demonstration about what could have happened also to other stablecoins. And if this was good for something, then definitely for the industry to be more conscious and look deeper into stablecoins and their collateral and backing. And that ultimately will lead to a more robust DeFi ecosystem.
Good points. What about DeFi, Niels? You are also doing quite some experiments, prototypes, also early products and so on in the DeFi perspective. What's your opinion here, and what are you doing there?
It's a hard or tough question, regulated bank, what to do with DeFi, because most of the DeFi products or how they are working are not matching together with our current regulation, because cryptocurrencies, for example, you can just trade around, but when we talk about like, then we need like KYC and AML stuff, which you which is not like working together with DeFi. So we can't work directly with DeFi products. But what we are doing is, so we see that DeFi is very important, and DeFi is very, very innovative and comes up with innovative ideas and products. And we try to bring the advantages from the DeFi world into the CeFi world by like building bridges. For example, so we are right now planning a secondary market for security token. And therefore, we will offer the issuers the opportunity to come up in our back with a liquidity pool. So this is a classic idea from the DeFi world, from Uniswap. We will also work with like Uniswap like algorithms. So we try to see the benefits and the innovations from the DeFi world and try to transfer them into the CeFi world to give the end customer or the user the ultimate DeFi experience, even if it's not DeFi.
Can you with this explain basically what Fireblocks is doing with their permissioned DeFi product?
Yeah, so that's another way how to do it. What Fireblocks is doing in a nutshell, so as I understand it, they are building up a huge bubble, and everyone who wants to go into this bubble has to be KYC'd and AML'd, and then you can interact in that bubble like a DeFi product, because you know that everyone trade is already KYC'd and AML'd. So this could be, for example, also one solution to give you customers this DeFi experience in a regulated environment.
Okay, and a very key question is here, in case you're doing like basically permissioned DeFi, what underlying stablecoin are you then using?
So we are not doing that right now. So you have to ask Fireblocks this question. I'm not in their DeFi bubble. Okay. So we are not working with stable coins right now. What we are doing is when we come up with a secondary market solution, we show the users like bid and ask prices, which is normally not possible because you are not on an MTF, but they trade then against us. So because we have an own market maker, we have own trading license and a market maker. So we try to shift around these problems and just focus on the experience that the user has. And we try to bring 1% of the DeFi experience into our products.
Okay, interesting. And this is then possible also from a regulatory perspective, right?
That's right. That's right. Because you are not, when you trade, then you are not trading the security token like on an exchange. You just do deals against us. It's a peer-to-peer deal against Banco Scheich. But in the end, for sure, we don't want to own like 70% of a real estate piece of a company when we offer whenever it presses the sell button. So therefore, we offer the issuer to come up with a liquidity pool in the back, and he can say like, okay, I'm willing to buy up to 5% of the token. So they provide 5% of the token, 5% of the money, and then we can show bid and ask prices as long as the liquidity was filled. And therefore, the user has the trading experience like on an exchange, and the issuer has all the advantages of a liquidity pool. And so we solve two huge problems in the digital asset and security token area, and we hope that this is not the final solution. The solution will come when we change the law that you can really trade them on MTFs. But until then, we try to come up with a bridge that has the market to scale.
Okay, that's very interesting. Maybe a further question to Benjamin and Christian. Are you also aware that existing financial organizations somehow tap into the DeFi sector, or is it too early? Benjamin, maybe.
I have to say that the financial institutions we are talking to, it's more like really getting exposure to crypto first before then going the next step and really, for example, use crypto, engage in staking, lending, and so on. So it's right now, our view is it's really about making the first step into crypto.
And Christian, would you agree here from the talks you have?
I would. So, I mean, true DeFi is further down the road. It will take more time. The interest is high. We're doing a lot of education in that field, but implementing permissionless pools in the regulated financial industry, I don't see that happening anytime soon.
Yeah, very clear. Okay, and I would like to now move over to another driver of crypto assets like Bitcoin and Ethereum. We see inflation is rising in Germany. Now we have 7 to 8% of inflation. In Estonia, you know, up north, the inflation rate is 19% right now, 19, you know, that's massive. And basically in all Western economies, the inflation rate is basically going through the roof relative to earlier times, right? And to some degree, people say here and there that this can also be a trigger that people are moving over their purchasing power out of traditional currencies towards crypto assets, but also towards real estate and other more scarce assets because people fear loss of their purchasing power, right? Do you also basically can you confirm this hypothesis when you talk to clients and other people in the ecosystem, or are people not thinking that this is somehow fitting together, right? Christian, do you have an opinion here from your talks? You know, is there a link, or do people view Bitcoin, for example, not from this perspective of scarcity?
This is a really, really interesting discussion, I have to admit, right? So everything is based on the assumption that Bitcoin can act or acts as store of values, similar to gold. My question would be, is that true? I mean, just looking at the recent correlation, especially to tech stocks, I would come to another conclusion, at least short term, right? Looking at the correlation of the last 6 months. In fact, Bitcoin acts more like a tech stock with a very high positive correlation between tech stocks and Bitcoin. It does not correlate, at least for this time period, right, with gold, which would support the assumption that it's really a store of value. So that begs the question, what in fact is Bitcoin, right? And how can it help hedging against inflation? I think that needs to be seen in the long run. At the moment, by just simply looking at the latest correlation, I'd be very careful stating that Bitcoin can really help as a hedge against inflation.
Yeah, it's interesting, but we also saw correlations coming and going and disappearing and being larger and lower. So it's not a persistent correlation, which is there over years, right? Correlation is only there for, say, a couple of months, and then it appears again, right? Maybe Bitcoin is, let's call it a technical commodity, right? It's basically a technical thing behaving like Nasdaq stocks, and it's also a commodity here and there behaving like gold. Who knows? Yeah, Benjamin, what's your opinion here?
I think, as Christian already said, we have to wait a bit, but on the other hand, it's then really about having access to that asset class or to Bitcoin. And I think what Niels said before, the thing is then when you really look at institutional investors, that many of them still, they have a hard time investing in Bitcoin or other crypto assets because still the infrastructure from that side is not, let's say, where it will be in a few years. So for example, putting crypto in investment funds and so on, this is all still, not that easy, so to say. And therefore, I think even if such investors would think about it, they don't really have the access to it. And on the other hand side, I'm a bit skeptical what really the institutional investors will do when the central banks increase the interest rates, because I'm a bit afraid that they might look at very small interest rates that are more attractive to them than maybe investing in Bitcoin. That could happen.
Yeah, interesting point. We have one question from the audience referring to Christine Lagarde's quotation because she said that, I will read it and translate it at the same time, that she said that crypto assets basically have no value, they are based on nothing, and they are not assets in any way because there is no, let's call it, security background and no collateral and nothing inside and around it. So it's basically just hot air, so to say, to summarize it. Benjamin, would you agree here? Or would you rather be on the side of her son? Because apparently Christine Lagarde's son has purchased crypto assets, as she has said, right? So what's your opinion? Are you on the side of Christine Lagarde or on the side of her son?
Not that much, a bit more leaning towards her son. I think, I mean, if you really dig into what Bitcoin is all about and Ethereum and so on, then it's sometimes really tough to digest such statements, because when you really look at how Bitcoin is designed, how much thought is put into it, that it really is able, or blockchain is able to transfer value over the planet from A to B in real time and so on, then it's really tough to digest that this technology is worth nothing. So yeah, it's always a bit tough to hear such statements, even if it's 2022, about this technology.
Sebastian, can you also add something here? What's your perspective coming from a corporate bank?
So not necessarily from a corporate bank, but from my personal perspective, this is an argument which is quite old already. Yeah, we know this has all no value, and it's nothing worth anything. But I think this is something which we have to consider, is that cryptocurrencies like Bitcoin and all the others are also, for example, being driver for innovation, for the usage of the technology for other applications. So this in it is, from my perspective, a value. Obviously, there is a demand, and if there is a demand and somebody is willing to pay for something, then from my perspective, also there is a value in it. Yeah. So I think education here is the key, despite the fact that I think that Ms. Lagarde is a very intelligent person and knows about all of this, and these statements are maybe made for certain reasons, which are of interest for the ECB. I don't know.
Do you think that raising the interest rates will drive down asset prices, including Bitcoin, stocks, and other things?
Well, I think if you talk about explicitly the effects or the correlation of, for example, cryptocurrencies to different things like inflation, but also, of course, the interest rate. One thing that is clear is that with an increase of interest rates, other investment alternatives get again more attractive and will put pressure maybe on further other alternatives. So I'm not an economist. I'm not the economist of Commerzbank, unfortunately. But nevertheless, yes, I think this will also have an effect of, for example, the cryptocurrencies, like all the other things which we see do have as well, like the Ukraine war, like the effects of the corona uncertainties and the inflation. So there are so many, and by the way, also the Terra Luna crash. So there are so many overlapping effects at the moment that it's very, very hard for me to say something what is maybe in the future or currently driving the price of any cryptocurrency.
Yeah, Niels, would you agree largely, or would you have a different opinion?
I would really like to comment on the sentence that Christine Lagarde came up with. So because it shows something. So I don't think that she really means what she's saying, but we have to think about that our politicians right now that work on the MiCA law, right? For example, and such statements just show that we have to have a big ethic problem in European politics, and that is why we have to become much stronger in lobbying. So this has long been recognized, for example, in the USA. The scene there is very active. Politicians, senators. For example, look at the Crypto Bahamas event or the crypto event in Miami. Almost any staff of the 50 senators from the countries, from the states in the US have been there, and the scene is very active in the dialogue and talks with them. And we have to start being way more active here in Germany, very, very quick. Especially in the topic, we have to talk with the politics, because if we do a mistake in the next 12 to 24 months regarding the regulation, we will see the same fiasco that we have seen with Web 2.0. Every company is now in Silicon Valley and in the US. And if we do the same mistake again, this will also happen with all blockchains.
Yeah, I agree concerning metaverse tokens, NFT tokens, DeFi tokens, and so on. This will be crucial. And I think the key date here will be next week, right? June 1, when the trilogue sessions on the European institutional level is basically proceeding. And at some point of time, coming to a conclusion, this will be very crucial. But interestingly, you know, if you think this through, it's not so much against the blue chips, right? Bitcoin, Ethereum, you know, these types of assets, they are not suffering so much. It's primarily DeFi, NFT, potentially metaverse assets, which might strongly suffer on European ground. That's maybe I'm wrong here, but that's so whatever they do, the blue chips will not be so adversely affected. It's more like more transaction intense stuff and assets where there might be an issuer which might suffer from this behavior. Yeah, that's an interesting point. Let's see how this unfolds next week. That will be very very exciting. Yeah, I would like to also ask one question coming from the audience. It's a very interesting question. What is basically the adoption time cycles on behalf of institutional investors or financial organizations? It's a very tough question because a clear number might be required here. It would be nice to hear. But is it from the initial interest until companies are launching their products? Is it 2 years maybe, or is it 3 years, or is it just 1 year? Anybody wants to give it a trial?
So I can just speak from our experience, and the answer is it depends.
Yeah.
So if we talk to a startup, if we talk to someone who's really focused on that topic or who's really innovative, we can, or if we talk to real estate companies that tokenize their assets, we have project durations of like 10 to 12 weeks. But if we talk to like huge banks where it already takes like four weeks or 6 weeks to get an NDA, so then you can imagine that a project will take like 12 to 18 months to be implemented. But this is not only because they don't want it or they are slow, but they are really big and they have a very complex IT infrastructure. And it's not only but maybe Sebastian, you can say something regarding this topic. It's not only compliance and that they don't want to do it. It's often also the IT infrastructure that is very complex.
Yeah. Sebastian, you want to add?
Sure. No. What you are saying is completely right. It's from various perspectives. It's from compliance perspective. It's an educational problem or an educational effort which you have to do with your management, an educational effort which you have to do with your risk management guys, the compliance guys. It's a regulatory topic. As long as regulation is still in the flow, it's quite hard. As long as you are not allowed to offer certain services, you obviously cannot do it. And last but not least, what you're saying is right. It is a technological effort, as you have to take state-of-the-art IT infrastructure and software and to combine it somehow with the older systems which you have in a bank, which is something which we do for different technologies for a certain period of time already, which is also working quite well. But nevertheless, you're right. It just simply takes some time. And yes, 12 to 18 months for such large projects is, as everybody knows who's working in a large bank in the context of IT, definitely a reasonable time frame, if even not too short.
Yeah, and Christian, would you agree with this time frame, say 12 months to 18 months lead time or cycle time?
Probably longer. It also depends on where you are in the budgeting process, right? And I think the spectrum is quite high. There are smaller companies integrating that in a couple of weeks, and then there's the European Central Bank working for ages on the CBDC, right? Something in between, I guess.
Yeah, but still the question is interesting, at least thinking about also what affects basically lead time. Well, to also come to a conclusion soon, I would like to raise one point. Everybody talks about ESG stuff, right? And we know that Bitcoin consumes a lot of electricity, right? Maybe Benjamin, is this indeed a hindering factor that companies are starting to explore these technologies? Are companies saying, so no, there is Bitcoin, let's not touch it, it's too dangerous for our reputation? Or do they have a more pragmatic approach?
No, I think still we are in discussions where we see that it's really about having the prejudice where you say, okay, proof of work is wasting electricity. We cannot simply invest in such assets. However, we developed a model together where we say, okay, it needs to be addressed, this topic. Yeah, so it's called a Bitcoin carbonization model, where we calculate the emissions of Bitcoin transactions or holding Bitcoin for a year, and then you would be able to compensate for the corresponding CO2 emissions. So I think it is also important to provide solutions like this to the industry, that you say, okay, if this is a problem for you, use this model or another model and do something against it. But I think this is always also then the point that we have to educate also that there are other assets which are being invested in where you don't ask the questions regarding the footprint. And we did it in our work together, looking at the footprint of gold, for example. So I have to say it's still a huge problem where it's simply a no to crypto because of this. But, and this is what I personally hope, is that if Ethereum successfully moves over to proof of stake this year, and this really works, then it's just Bitcoin. And I think if this merge to proof of stake for Ethereum will work, then it will definitely get easier. And then if we look a bit in the future where we say, okay, Ethereum will be used for transactions, could be then securities which are tokenized and run on Ethereum and so on. I think this could really help a lot in this discussion.
Yeah, interesting point. And maybe to all of the other three, well, you told us that very often Bitcoin, Ethereum, and so on is the entry point for department heads and stakeholders and investors and so on and so forth. You know, do you have the feeling that this ESG issue of electricity consumption, that it's deterring people from at least getting started, right? So like, or do people take a pragmatic approach here, at least to get started, right? You know, the problem is getting very, very dangerous when people invest a hell lot of money, because then the related CO2 emissions are also, you know, going through the roof. But at least to get started, it should not be a problem, building custody infrastructure and so on. Niels, are these basically 24-hour discussions you have with your stakeholders?
No, to be honest, normal corporates, normal high net worth individuals, in my opinion, the topic electricity versus Bitcoin is just a topic for the media. It's newspapers who are talking about that. It's the easiest way to just hit Bitcoin and be against Bitcoin. And on a B2B level in the institutional world, this is absolutely no topic, because everyone knows that if you look at the electricity for like fiat currencies or for like gold or for like other services, I just can't say we are not talking about that with our customers and
yeah, there seems to be a technical issue here with the Wi-Fi connection. Maybe it's just here. But let's move over to Sebastian and Christian to also close this round. Would you agree with Niels that this point is partly for the media and not so much when you talk with stakeholders?
It's interesting what Niels was just saying, because I can say that the whole discussion around ESG is definitely important for us also internally. Sustainability is a key cornerstone of our strategy 2024, next to things like customer orientation, digitization, profitability. So this is one of the four cornerstones which we have, and it's more complex to just say it's good or bad from my perspective. So what we are doing and how we try to talk with regards to ESG or how we handle this topic is that we are having a so-called sustainability finance framework, where we do have a very transparent classification of our products, and new products are coming, like, for example, a custody solution would come into this finance framework. And so we are able to, and this is depending, of course, on the volume and the usage of specific products, we can very transparently evaluate how it affects our goal to be, for example, by 2050 at latest, CO2 neutral. And so we try to be very transparent and have a look at the whole product portfolio which we have, and not only having the discussion like, is Bitcoin good or bad?
Yeah. And finally, Christian, what's your final opinion here? Would you agree with the previous set points?
Proof of work is not optimal because it wastes a lot of energy in the mining process. But to maybe close that with a very controversial statement, I believe that distributed ledger technology is the best thing that could have happened to the carbon industry, because I expect that soon we'll be able to use a universal global infrastructure to efficiently issue high quality carbon credits, trade them, store them, and use them even in a decentralized environment. And that will lead ultimately to more efficient carbon markets. And I really believe that this will be the biggest market in the next 2 decades, at least.
That's a very interesting closing word, also turning everything what we have said in a positive way, because I also agree, since half a year or maybe since 1 year, the idea of tokenizing carbon certificates or carbon tokens on chain, right, has become very interesting. And this, let's call it sub-industry, is also unfolding in a very dynamic way, with many companies being found, but still the ESG people have not recognized this. I think that's interesting, right? Right now it's quite a technical discussion, and the ESG people haven't really found this tokenizing carbon topic yet. Therefore, I think I would agree that should be quite interesting for the remainder of this year. And maybe I will also make a note here, maybe we should make this as a topic for one of the next sessions. Yeah, thanks very much for being here. I think that was a quite good overview of what's happening these days in the crypto ecosystem. And I think, yeah, we have very exciting times ahead. Thanks for being here, everybody.
Thanks, Philip. Goodbye.
Thank you.
Bye-bye.